Hey folks, this is Hank. I'm going to talk about the S&P 500, the SPY. We put some option shorts and here's some puts up on this. Made some decent, I'll say more than decent money on this twice. Now up here, and I'm going to tell you why. We're, up here at the 687 to 690 level. Put some shorts on why, because it rejected the 50-day moving average, even though we're still in what? The historic chop box is what I like to call this. I stretch it all over here. We can pull it back here. We'll see how long this goes on. But we've been in the same area since back in October of 2025. Nothing has changed. We came out of this area. We closed down this short position here from upper 688s down to 675. It was a $700 strike put that went out to May 15th that we did on this. Went back up here, we did it again, right? We hit it right here on 21-day moving hours, which we closed that one out today when it came down to the 675s level. So we've been doing very good on the shorts just inside the chop box. So it's not that you can't make money. You have to, when it's chopping and going sideways in consolidation, you can. You just have to know what you're doing to be able to make that money, right? We still do not have a direction on the market. We are diverging on the market. We've been trending down. I'm going to pull us back here. Matter of fact, I'm going to pull out to a weekly chart so you can see what I'm talking about. You got a trend going down here on the RSI. You're going up here, still holding this big, strong move, which I call Liberation Day sell-off, and you've been popped ever since. This was the first announcement of tariffs last year, and then we've been popping up ever since. We've been holding the highs up here. I drew my Fibonacci from the sweet point back here from COVID to this historic chop up here. And I probably should have spelled chop right. But anyway, there we go. And we're still not correct. All right, we're going to go back here. We're going to do it. And we're good to go. So the market is struggling. I'm going to zoom back in here. This is a weekly chart to break out of this box because one, it probably doesn't want to go down, even though it should. I'm going to tell you why. And I'm going to show you why. We need a correction. It needs a correction to be able to allow people to buy at lower levels. And you're struggling up here. But I'm going to warn you, when you consolidate at a long period of time, it's also can be considered a pullback because you can see the RSI starting to cool off here. I do believe we're going to get a pull down and probably push back up. Now, my fib, see how they hit perfectly from me drawing it from back here, COVID lows up here to the historic chop box high here of all time highs near the 700. We never breached 700. So here's the deal. We closed above. I'm going to go back down to the daily chart here. We closed below, the 21-day moving average. We retested that today and we closed below it. That is a sign of weakness. We are curling over. Okay. You are curling over on the market. Okay. You have to watch out for that. I think there's more downside. I think we come test out to 656. Ultimately, I'm looking for 610, 612s. The bottom of this Fibonacci at the level here at 0.23s, and then lower maybe. But there's a channel here that we've been staying inside of. We bounced out of it. We got a little greedy. It's starting to pull back into that channel area. Watch out for this space, folks. This is the S&P 500. We did well on this transaction. If you want more, you can join us in the Discord. Talk to you guys later. You have a great evening. Bye. Hi, folks. Hank from SixFourTrading. If you like this type of content, and if you want to trade with me live in my Discord, there's a link in the description below. I hope you guys trade well, and I'll see you guys in the Discord. Take care.